It finally happened. For the first time since 2018, the Fed has raised rates. Jerome Powell came in and mentioned and said that the Fed is going to be raising rates about 0.25%. And there's a likelihood that they could continue to raise rates every single meeting up until the end of the year, bringing it to around 2%. And so that's going to be interesting. I'm not quite sure we get there, but beyond all of that, what are going to be the stocks that are going to be worth looking at and buying leading into an interest rate hike environment that we're going into right now? Not to mention inflation is so much of a thing. So there's going to be really important that you select the right stocks that are going to benefit from an environment like this. So I'm going to get into that in just a second, but I wanted to just backtrack a little bit on the environment that we're going to be in. So rate hikes are going to go up, or rates are going to go up, interest rates are going to go up. And why is that important? It's going to be really important for you to understand that stocks that report for a loss are going to be hit the hardest. They're going to be the most sensitive because the ease in which to borrow money is going to be a little bit more difficult for those companies that don't make any money. And so they're going to potentially have to resort to selling stock or going through dilution, and that continues to bring the stock price down. So that's how sensitive it can be. So the stocks that got you guys here before, maybe some of the high flying ones that weren't reporting any kind of profits, such as a Snowflake, for example, or we could even go as far as like Open Door or GameStop, AMC, you name it. Those stocks are going to be the most sensitive to rate hikes in the future, and I think that those are going to be ones that I probably would lean away from, because there's so much good opportunity here with some really good quality companies that have brought themselves down in anticipation of a rate hike. I mean, the stock market's been coming down as a result of rate hikes coming. And now that they're here, I think that there's a lot of upside. The economy is still in great shape. We're at really low employment rates. And so I think for that reason that we're going to see some really decent moves in some good quality companies. And that's going to be the focus here. So let me talk to you about the first stock that I think is going to do really well. And that's going to be Bank of America. Bank of America instantly makes money each time rates go up. This is a bank, much like many of the other ones, that are going to be making money off of those borrowing rates. So as the more that the Fed raises those rates, the more that Bank of America makes. They're going to continue to put out loans. They're going to, demand for loans is still going to be there. So I think that Bank of America is going to be a solid one, especially given how much this is corrected. Let's take a look at the chart here, and I can show you exactly what I'm talking about as far as the opportunity is concerned for Bank of America. So as you can see here, this corrected pretty sharply, and it didn't have much to do with anything else other than sanctions being imposed on Russia from the U.S. And to be truthful, there wasn't a whole lot of exposure that Bank of America had to Russia and the sanctions. So it really isn't going to be that impacted. But we can see that there's been a clear bottom on Bank of America at around $38 a share. We're just now touching that 200-day moving average. And I think that the momentum is going to continue to move here as long as we see a close above that in the near term. I think we could see it as early as a day from now as it closed the day at 42.80. That's literally right where the 200-day moving average is, represented by this purple line. So I think if it moves up above that, we see a close there, the momentum should likely continue. It's really encouraging to see that despite this bounce, we're seeing RSI just at 48. So there's plenty of wiggle room here. I think it has lots of potential to continue to move up. And it may be met with a resistance at around 45.36, which is where the 50-day moving average is. My expectations is that it's probably going to act as a resistance there. We'll see if it moves up above that. But I think that Bank of America has a lot of room to run. You can see here that obviously I've kind of been watching this one for a while as it's been kind of living in this ascending channel. Obviously broke out of that when Russia-Ukraine happened. But I think that there's lots of potential here. And there's a high probability we can see this live back into this ascending channel as this starts to move back up. Next is going to be Cleveland-Cliffs. And this is one that might not be, it might be new to you. You might not have heard of it before, and it may be boring to some of you, especially if you're used to trading a lot of those high-flying type stocks. But this is one that I think is going to generate solid growth. It's going to continue to go up. It's going to continue to make you money, and there's very little risk involved here. Demand for materials like steel, like what Cleveland-Cliffs does, the business that they're in, is going to continue to go up. The cost of steel, the cost to make steel is going to go up, and they're going to pass that on the consumer. Demand's not going away anytime soon. You're talking about cars, buildings, you name it, anything, infrastructure bill that we haven't talked about in quite some time. Cleveland-Cliffs is still going to benefit from something like that as well. they have pricing power. And this is where I'm kind of leaning towards in an inflationary environment, as well as where rates are going up. I think that Cleveland Cliffs, with the pricing power that they have, as long as demand stays where it's at, which there's no sign saying that it's not going to. I think that Cleveland Cliffs is going to be a great one to trade. They have a great balance sheet. The growth is there. The CEO is phenomenal, and it's still very cheap. If we look at a forward PE on a forward PE basis, this is trading at just 5 times next year's earnings, and the growth is substantial. So I think that Cleveland Cliffs is a solid play here, and the chart looks even better. Let me show you. So as you can see here, I actually have I have drawn here a nice ascending channel here as well, and it's been living very comfortably in there. We've seen it test the highs and the lows. It's at the high of the channel, and you can see that it's a little bit hot on RSI as well. Sitting at 64 is what it closed at today. Really nice day today. As of this recording, it was up 3%. My hunch is, though, if we continue to see things move as I think that they will, especially with things going on with sanctions regarding Russia. And let me be clear, just because, let's just say tomorrow, Russia, Ukraine ended, right? The war's over. Sanctions aren't going to stop with Russia. You don't just get to have your sanctions lifted because the war is over and we're going back to live life as usual. That is not going to be the case. So if that continues to wage on, which I think it will, and I think we all can make that assumption, then Cleveland Cliffs and materials in general, especially ones that have high exposure to Russia, are going to continue to do well. So my hunch is that we could see this break out of this channel. I would watch this very closely. I think the midpoint here is definitely an area to watch for, around 23.25. But with this closing at 26.18 and the high being around 27.79, this is going to be one of those rare cases where I would say that it could be beneficial to buy this high and sell even higher. I think that that's probably going to be the scenario here for Cleveland Cliffs. Next is going to be Google. And I think that this is going to be one that you might also be scratching your head around. It's like, well, Google's had a really sharp correction, and it's a tech stock. All of tech has gotten beaten when rates have gone up. But as I had mentioned before, we've got this proverbial monkey off of our back. Rates have started, okay? Usually when the first rate hike happens, we see a nice pop in growth anyway. And with the fact of the matter is that Google has corrected so much that I think it's at a point now to where it would be acceptable to consider scooping some up. Not only that, but we're in an environment as well and we've kind of haven't really talked about it all that much, but COVID is kind of over. Now, let me backtrack. It's not over. It's still going to be a thing, but everybody's learned to live with it at this point, and people are learning to get on with their lives and live with COVID. So I think at this point, when I look at travel demand, for example, and we'll just focus on travel demand, I think we're going to set records as far as that's concerned this summer. And I think that it's already happening. Search volume for travel destinations is going to be, and already is, insane. Demand is wild right now. And who benefits the most from that? A company like Google does, because you're going to search those destinations. Google makes money off of those that get listed high on the search. And that's how they're going to be able to make stupid money just on travel alone. Forget about everything else that they do, but travel, in my mind, I think is going to be a huge driver for revenue for them in the next couple of quarters, maybe even beyond that. But the chart also looks damn good, and I think we've seen a solid bottom on Google, and we're not far off from it. So you haven't missed a boat on here, and I think that Alphabet's going to be one that is worth scooping up as well. Let's take a look at the chart. So as you can see here, this is a clear bottom to me. I think that $2,500 is the support for Google or for Alphabet. If we look at this, it's about ready to approach that 50-day moving average, which is closely behind, which the 200-day moving average is closely behind, and it's sitting right in the middle of RSI. I think this is actually a really good solid spot to grab Google. Are you going to get the bottom of it? No. But again, the upside here is tremendous, and I think that this is, even at $3,000 a share, this was actually cheap, believe it or not. Because if we look at the forward PE on this, it's sitting at 23 times next year's earnings. When you look at something like a Microsoft or an Apple, for example, they're all at or near 30. And I think that this is actually very, very cheap, considering that they come in and crush earnings and they've raised expectations. They have no signs of slowing down. And I think that the warm up is just, or the heat up is just getting started. And I think that Google is a really solid buy here at these levels. So another area that I would watch for as far as resistance, let's just say that it gets up to that 200-day moving average at around 27.28 and gets rejected. I would watch that $2,500 mark again. But I say that this is going to be one that I think the bottom's in. I don't think that we're going to see this at its lows again. Probably not even this year, maybe ever. I think that $2,500 is it. We're going to be looking at this price and thinking, man, I wish I would have gotten it back then. And as a bonus, I want to talk about this specific stock, which I think is actually going to be an amazing stock to own moving forward. And that's Berkshire Hathaway B shares. The stock just hit all-time highs today. But again, I think this is one that I think is going to continue to move up. You're talking about value stocks right now, and those are going to be the ones that benefit the most. Berkshire Hathaway has so many companies in their portfolio that have pricing power. In an environment where we're seeing inflation take place and rates are going up, nothing benefits those value stocks more than what we're in right now. So I think that that's where a lot of investors are going. We've already seen that. I don't think that these all-time highs should be anything that anybody should be afraid of. So if you just want exposure to value stocks in general and you're not quite sure which ones to go after, those Berkshire Hathaway B shares are going to be absolutely incredible ones to buy. So let me know what you guys think about that in the comments below. Thanks so much for tuning in. Hit that like, subscribe, all that good stuff, and I'll see you tomorrow.